Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Now, looking at the regular session, we had some green on the screen. The broad S&P 500 advanced 0.5%, posting another record close. The tech-heavy Nasdaq also up 0.5%, also hitting a fresh all-time high. The blue-chip Dow climbed 0.6%, and it was all around good news on the trade front, particularly around U.S.-Canada relations. So let's check in now with Jason Britton. He's the founder and CIO for Reflection Asset Management. Jason, how are you doing today? Thanks for joining us.
Good morning, Ryan. I'm doing well. It's great to be here.
Awesome. Great having you on. So let's talk about what's playing out in the past few days. It looks like it's risk on again. Markets are pushing up higher, and we do have some reason for markets to push up yet again to all-time highs. Walk us through what you're taking away from the latest session.
Well, I think it's trading off the back of the great news coming out of Canada, deciding to rescind that digital service tax. I think that brought them back to the negotiating table and hopefully back in the good graces of President Trump, and we'll see that normalize a little bit. We've got our eye here in the States on next week, which is the end of that 90-day period for the initial pause on the rate cuts and the tariffs. So it's really going to be an exciting couple of days.
Yeah, I'm also at the same time trying to wrap my head around what's going on here because we have a lot of uncertainty around many things, tariffs. You've got also geopolitics in the Middle East and many places as well, but markets are pushing on higher. Are you surprised to any extent with the level of optimism?
Somewhat, Ryan, to be honest with you. I think the market is ingesting the economic data. U.S. jobs market is holding still. Rates tend to be somewhat bound. So they feel like the downside pressure really isn't there. The market pretty much completely ignored the Iran-Israel situation there for a little while. So it really has been. It's been muted on the geopolitical side, over response to the tariffs, and then sort of using the economic data as an excuse to keep buying here in the summer.
Yeah, we are still seeing pockets of strength when you look at the data. So what is that going to tell you about how the Fed's going to be moving on rates?
So I think the Fed's made it very clear that they're going to continue to be cautious. They're not going to be pressured by the White House. I mean, if you've heard the Trump administration, they've already said that there should be between 100 and 200 basis points of cuts. And Chairman Powell's just not going to have it. He's going to wait until the data backs him up. But there was one desperately sad spot today in the marketplace. I know you talked a lot of green, but there was a little red on the Amazon, right? It traded down 175 today, and apparently there were some people whose feelings got hurt. They didn't even get invited to the wedding.
Okay, I didn't get invited as well, so I'm not sure if I should get that sore about it. All right, talking about some of the tech stocks, the Mac 7 have been on a pretty good run so far. If you look at Meta, their shares are hitting an all-time high, and it's all around the AI boom. How are you feeling about going to the Mac 7 at this point?
So, I like that trade still. I still think there's a lot of value to uncover in AI. I still think that there's reason to be nervous about the enormous capital expense that these companies are undergoing. But I'm pro innovation. I really like the way that I think some of that energy and efficiency and some of those trades are coming out. So I think it's something worth keeping an eye on.
Okay, so that's for tech. What about places like energy, where you've got a lot of moving parts when it comes to oil prices? Where is that sitting for you right now?
So for me, energy is a mixed bag, right? I mean, you're seeing some pressure on oil. It spiked a little bit there, in the $70 and $80 a barrel range after the Iran situation with Israel. Came right back down. Didn't really disrupt supply too much. Clearly, you've got aging infrastructure in the States. You've got a huge amount of consumption and demand. I think I'm really interested in alternative energy and what potentially could come with this nuclear play. Nuclear is not something the States have really paid a lot of attention to since the 70s. We've been very behind our European counterparts. But we're starting to really see some of the big tech companies put pressure on states and regulatory agencies to think about nuclear. And I think they've got a president in the White House who will smooth some of that over. So I'd be looking for a play there.
Yeah, that's an interesting area to look at, the picks and shovels of the AI boom, so to speak, because of the data center power demand. You might look at nuclear as an emerging space to keep an eye on. All right, how about retail? You talk about consumer demand. When you look at retail, are you seeing a change in consumer patterns that's evolving? Where does that sit right now when you look at all the uncertainty in the growth outlook?
So what's interesting is household debt has been a constantly fluctuating number that's far too high in the States, but continues to go higher. Mm-hmm. You see companies like Burlington, BURL, it's a ticker I like, Burlington Stores. It's sort of a mid-range to discount range thing. You've got a lot of play there. The American consumer, while all of the studies and all of the surveys are showing concern, they continue to spend. So they're telling people they're nervous, but they're not changing their habits yet.
Okay, how about the other part of the spectrum, like Walmart, which has issued a pretty disappointing outlook on some fronts, just warning that things are going to be tough, particularly around tariffs, because lots of stuff comes from overseas. So less profitable potentially in the coming quarters. Where do you see that end of the spectrum?
So I think that's right. I think that Walmart has always been very straightforward with the marketplace, and they're usually very good about managing the guidance. It's one of the largest companies in the world with one of the most sophisticated and complex supply chains, sourcing everything from everywhere. And I think that they're right to be nervous. I think that what we'll see, though, is, and I hate to jump on the bandwagon, but everybody talks about the taco trade, right? Where Trump chickens out. I do believe that when we get push comes to shove in the midweek of next week, when that 90 days is up, regardless of what the Secretary of the Treasury says, Trump is not going to drive this economy off of a cliff in the middle of summer. So I think you're going to see either an extension again, or you're going to see some deals other than the UK announced.
Yeah, talking about deals and Trump and the taco trade, we are also talking about the one big, beautiful bill. How beautiful is it, Jason?
Oh, well, I think that's all in the eye of the beholder. The Senate didn't think so, right? It squeaked by on party lines, 51-49 on a procedural vote over the weekend. And you're going to see it go back into the House, where several deficit hawks have already said the Senate interpretation and revisions are unacceptable to them. And the House, they can't afford to lose more than a handful of seats, or Speaker Johnson is really going to be looking for a new job come the fall.
Yeah, so a couple moving parts to that. What's it going to mean for markets if you do see that getting passed?
So if you see the one big beautiful bill, I think the market's still trying to ingest exactly what it means. You're going to see, obviously, tax cuts across the board. By that, I mean the 2017 cuts are going to be extended. You're going to see a SALT, which is the state and local tax here in the United States, which is our income and local taxes, are going to be increased. So our Republican and Democrat friends in high-tech states like New York, Maryland, Massachusetts are going to be very happy, California. So I think it could be an overall boon to the U.S. consumer, but I don't know what it does to the deficits long term. So I would say to your listeners in Asia, as long as everyone over there continues, meaning Japan, China, et cetera, to buy U.S. treasuries, we'll likely get away with it. As soon as you decide that we can't continue to finance, it's going to be an interesting fall.
Yeah, so on one hand, you've got tax cuts, which could help support markets. On the other hand, the long-term optics or perceptions of where the U.S. is going could get a hit. And in that sense, are you seeing overseas foreign fund managers, for example, rotating away from the U.S.? Are you seeing flows moving away?
I do think that there are fund managers, and I also think that there are governments and their strategic reserves that are pivoting away from the dollar and moving into things that have been other haven currencies like the Swiss franc and gold. I don't know what the entire balance of payments has been, but I do see that at least sentiment suggests that there is a little bit of reticence on the foreign side of continuing to hold U.S. dollars, especially long term.
All right, lots of moving parts in the second half of the year to look out for, and helping us out this morning has been Jason Britton. He is the founder and CIO for Reflection Asset Management. Jason, always a pleasure having you on the show. Thank you so much for your time and insights.
My pleasure, Ryan. Thanks for having me.
All right, we'll catch up with you again soon. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.